Hey everyone, welcome to Strike. Today I'm going to share insights on a stock which you could have tracked using Strike Volatility Skew screen as well as the Rohit Setup screen. So it is important to combine various tools together to come up with a trade idea, be it derivatives data or normal technicals that you use. So firstly, what you can see currently, I'm on the dashboard of Strike, and today's top loser stock of Nifty is Apollo Hospital. So this has been falling since 22nd Feb. And the actual high was made on 22nd Feb, but we really got a strong bearish candle on 26th of Feb. So let me just go to the stock section and try to go to the Rohit setup. So now I'm on a daily chart. So it did whipsawed on the RMI indicator for a while, but finally on 26th Feb, when there was this big bar, let me change it to candles. So this big red candle, it also gave a downtrend bearish signal. So now you have that confirmation from the technical, but I want to see it based on the options data, right? So I'm going to look at the volatility skew for the stock. So before we go into that, I'd like to explain a couple of things about volatility skew that are the actionable items when looking at a volatility skew curve. So what exactly is a volatility skew curve? On a graph, when you plot the IVs of all the OTM puts and OTM calls, you end up getting a volatility curve like this. Let me just increase the size. And this one curve belongs to one particular day, and there is a separate curve for each days. This is known as volatility smile or volatility skew. So to go into the actual uses of it, I'll not go too much into depth of how the formulas have come up for IVs, but we'll just try to understand what can be the actionable items out of this. So let us assume this is the volatility skew curve for one particular day. And the very next day, let me use a different color. The curve is something like this, followed by another day. The curve is something like this. Now, what is the change that we are witnessing? What we are seeing is the curve is shifting to the left. That is, lowest point of the curve is shifting to the left. That is, the market is expecting something bad to happen. Basically, the volatility of OTM puts is rising faster than the volatility of OTM calls. So, two actionable items that we'll notice is the shift of the curve. One is the shift of the volatility skew curve, and the other one is steepening or flattening of the curve. So, if I just explain you the examples for both. Yeah. So if this is a curve for one particular day and the next day it gets flattened and there is also a rightward shift, this means the overall volatility is reducing and there is a rightward shift. So this is something when the market, you can expect a bullish outcome out of it. That means overall IVs are going down and the lowest point in IV is shifting towards the right. So an opposite of this, as I explained earlier, is if the curve is shifting to the left and the highest point here on the left side, basically the curve is going up like this. This means the lowest point in the IV is shifting to the left and IVs of OTM puts are going higher. So curve shifting towards the left and steepening of the curve is actually having a bearish impact. And opposite of that is flattening of the curve and shifting towards the right as a bullish outcome. So now we'll try to see it on the real-time example we just discussed. So I'll just go to the option section and volatility skew. Let us select Apollo. Now we saw that the breakdown came on, not the breakdown, but the downtrend sell signal came on 26th of Feb. So I have enabled this curve based on 26th Feb, and you can choose to see up to 5 days of historical curve. So by default, we have 2 days of history, that is 2 days before 26th, be it 25th or 24th or whatever the working days were, those have been plotted. So this is the chart 2 days before 26th Feb, and this is the curve for 1 day before 26th Feb. Now, what is the observation that you're seeing here is you got a sell signal on the stock with a leftward shift in the volatility curve, that is this orange one, and it is steepening as well. So what is this impacting us? This is telling us that lowest point in IV is shifting towards the left, which means buyers are now very cautious, and IV of OTM puts is going up faster than the IV of OTM calls. So there is some fear of downside coming in. Let's see this data for the next day as well. On the next day, you see there is further shift towards the left in the lowest point of IV, and again the curve has steepened further. So the same observation is getting verified on 2 regular days, but you got the actual signal on 26th based on your technical indicators. That is, in this case, we are looking at the downtrend signal. So the thing I wanted to highlight here was when you're getting a certain signal on based on any indicator that you use, and then you try to combine it with some kind of data from the derivatives. In this case, we have used volatility skew. It can actually end up giving you a very good accuracy in the trade. So you can see it's almost down 5% today, and this is the day we could have analyzed the same outcome and could have traded this downside. So if you like this video, do like and share, and keep sharing your thoughts with us. We'll try to keep sharing such insights using Strike. Thank you.